What is up, Chads and Chadettes? I'm Dexter, and this is your DexlShorts Intelligence Brief. Now, I know the crypto markets look like an absolute bloodbath right now. Prices are in a free fall. But if you're only looking at the price, you are missing the real story. So let's break down the two narratives that are battling it out right now: total market panic versus the quiet institutional buildout.
Okay, so this recent wave of selling, it really kicked off when Bitcoin's price dipped below this massive psychological level. For traders, see, breaking a big round number like that, even for a split second, it's like a fire alarm going off. It just sparks this chain reaction of fear and a ton of automated selling.
And that fear? Well, it created a massive cascade effect. In a super short amount of time, we saw nearly $2 billion in forced liquidations. Now, that is a huge deleveraging event. Basically, traders who borrowed money to bet on prices going up got completely wiped out. The whole market just got reset.
And if that wasn't enough, we had the U.S. spot Bitcoin ETFs. Investors yanked over $500 million out in a single day. You have to remember, when these huge, regulated funds see money flowing out, it puts some serious, direct downward pressure on the price, and it makes it way, way harder for the market to bounce back.
So, all of this culminates in what you're seeing everywhere: a total sea of red. Market sentiment has just swung wildly from greed all the way to extreme fear. And that is a classic sign that panic is really setting in. But you know what? The most interesting stuff, it almost always happens just beneath the surface of all this chaos.
Yeah, the pressure isn't just on traders. If we look on the blockchain itself, we can see Bitcoin miners, the computers that secure the whole network. They're earning less for their work than they have in months. Their profits are getting squeezed hard. But here's the counter signal, the really interesting part. The amount of Bitcoin just sitting on exchanges is dropping. This suggests that the long-term investors, the real believers, are actually pulling their coins offline to keep them safe, totally unfazed by the storm.
And that brings us to this. So while the short-term market is running around with its hair on fire, the world's largest financial institutions are sending a very, very different message. I mean, just look at this quote from the CEO of BlackRock. He's not talking about daily price swings, he's talking about a fundamental rebuild of the entire financial system on brand new technology.
This, my friends, brings us to the other side of the story, the institutional narrative. While the market is reacting to fear, the major players in traditional finance, the suits, are quietly building the infrastructure for whatever comes next. They're looking right past this current volatility.
Let's just look at three perfect examples of this. First, you've got BlackRock, and they are out there championing tokenization, which is basically just turning real-world stuff like stocks and bonds into digital tokens on a blockchain. Then you've got FTSE Russell, bringing official stock market data on-chain. And finally, the global bank UBS just completed a live fund transaction entirely on-chain. Look, these aren't just little experiments. These are the foundational building blocks connecting old-school finance with this new tech.
Now, this institutional push, it can't just happen in a vacuum. It needs clear rules, right? And that brings us to the global race to build out the policy and the infrastructure that's going to govern this whole new financial world.
And right now, we're seeing two pretty distinct strategies play out. Over in Asia, you've got Hong Kong, and they are laser-focused on creating super efficient markets, making it easy and cheap to trade. Meanwhile, the US is currently all about security and enforcement, trying to kick the bad guys out of the system. Honestly, you need both of these approaches to create a mature and safe playground for the big players to really get involved.
And all this regulatory clarity? It's finally letting companies build. For instance, Zero Hash just got a MiCA license. Think of it like a golden passport to offer crypto services across the entire European Union. And in the US, a regulated exchange called Bitnomial is now accepting new kinds of digital assets as collateral. These are the crucial piece-by-piece steps toward a fully regulated ecosystem. Okay, let's shift gears. We've talked about the suits, the institutional world. Now let's jump into the crypto-native ecosystem of DeFi, or decentralized finance. This is where all the cutting-edge innovation happens, but it's also where the risks are the highest. And believe me, those risks are very, very real. A recent exploit on a major DeFi protocol called Balancer drained over $100 million from its users. It is just a brutal reminder that in this super innovative space, security is a constant battle.
But what's really important here is how the ecosystem responded to it. The network that got hit was temporarily stopped to prevent any more losses, and the developers immediately got together to coordinate a plan to recover the funds. It shows this growing maturity in how to handle a crisis, even in a completely decentralized world. And even with these huge risks, the development continues at a blistering pace. You've got new networks like Tyco publishing their plans for launch, while established projects like EtherFi are using their own treasuries to support their token's value. The key takeaway here is simple. No matter what the market is doing, the core development in this space never, ever stops.
So this is the core conflict we're seeing right now. On one hand, you have extreme fear driving the short-term market into the ground. On the other, you have this deep, unwavering conviction from the world's largest financial players who are building for the long term. The critical question is, which of these stories is going to win out?
That's the signal and the noise for this week, Chads and Chadettes. For the full deep dive on all of this and a whole lot more, make sure you listen to Mr. and Mrs. Dexl break down this week's action on the DexlCast this Saturday. Stay sharp.